On this episode of Exactly How, you'll discover exactly where the biggest property buyers in the U.S. are investing. You'll understand when and how the next recession is coming, and you'll understand how to properly position yourself for success in 2020 on this episode of Exactly How.
You're listening to the Exactly How podcast, where you'll hear the underground, closely guarded wealth building secrets of successful people around the globe. Discover exactly how to improve your mental, physical, and financial health. Feel better, make more money, live, give, and prosper in today's exciting, fast-paced world filled with opportunity for those who know exactly how.
Hello, everyone. Welcome to the Connected Investors podcast, Exactly How. During this episode, you're going to discover how to analyze deals, all the due diligence, and we're going to give you a market update for 2020 that is really going to blow you away. This is actually a retake. We did this recording and I was so pumped about it because the gentleman I'm about to introduce you to just brought so much more than I could have ever anticipated, and then it didn't record properly. So thank God we were able to get this gentleman back on to bring it to you because you need this information before 2020 hits. All right. For those of you who are new, my name is Ross Hamilton, today's host and CEO of ConnectedInvestors.com, the real estate investors marketplace and community. And today we have the privilege to learn from a man who made it to the Inc. 5000 the last 5 years in a row. That's very impressive. Prior to his career in real estate, he was a program manager, engineer, marketing director, and all of that changed when he himself started to use some real estate services and was not at all satisfied. He was like, there's got to be a better way. So he jumped in. And I would really describe our guest as an innovative game changer. And today he is going to explain exactly how to do proper due diligence on any real estate deal and give you an update for the market. His name is Alex, and today he's going to break it all down. Alex, thanks for jumping on the line.
My pleasure. That's a great introduction. Couldn't done it myself.
Yeah.
Thanks, Ross.
Yeah. Well, we're really excited to have you back on the call for the second time. I learned a lot from our first call, and now finally our hundreds of thousands, nearly 1 million members get to hear from you as well. So, Alex, before we jump in to update everyone on the market and give them some insight on some really cool ways to do due diligence when buying a property, you contribute a lot of your success to your ability to get a deep understanding of your clients' issues. Why do you think being able to come up with creative solutions for some big problems has been so key to your success?
Yeah, I mean, I really, first of all, come from the immigrant background, right? I immigrated from Belarus, and I came here absolutely poor, $0, very dependent on our government, and really no way to grow. And I was very hungry for hitting a big success. So I did follow the regular path in life of going through college and getting a full-time job and working 9 to 5, and then I realized, there has to be something more exciting. I started investing in real estate. I invested in real estate, and I just hated the services I used, right? So I used one of the title vendors to do my title diligence. I bought apartments. I bought the university housings. I dealt with the drug dealers, drug users, ejections, all kinds of things. And then I realized that, I really wanted to do something special utilizing my computer background, engineering background, marketing background, and real estate background all into one to create the single solution that nobody else has in the market. You have these large companies like First American, Stewart, that are very big and unflexible. This is the solutions that they offer, and this is, my way of highway. So I created this company to create something extremely unique, and it's the market is really catching on fire for me because people haven't seen those solutions before. So it's really an integration of completely new things. Bringing a lot of computer analytics, a lot of due diligence knowledge into a single package. So that was extremely exciting. This is like, everybody says your business is like your baby. That's your baby. That's my baby, right? So it's something that keeps me going every morning. a creation of something new that nobody else has, and an ability to do it.
Yeah. Well, that's really exciting, and I'm excited to jump in there. And also, you wrote a book, which we're going to be talking about as well throughout this presentation. Now, for those of you who are new, what makes the Exactly How Financial Freedom podcast unique is every show comes with a detailed action plan. We go ahead and pull all of the information out of our guest's head and give you an easy to follow format so you can actually take action. This is exactly how we show you exactly how to do something, which makes this very different than other podcasts. So to get all of the notes, the takeaways, and some of the free gifts I'm going to mention here in a second, visit exactlyhow.com. Exactlyhow.com. In addition, you can also throw your name into a drawing to win our $3,000 software called PIN that pinpoints all of the best deals in any market and all of the most active buyers and private lenders as well. So it's the one piece of software you need to find any type of deal, whether it's an apartment complex or a single family house. If you're looking for it, it's inside PIN, and we're going to give it to one of our lucky listeners who visit exactlyhow.com. If you're watching this live, go ahead and go there right now. We haven't picked the name yet. Throw your name into the hat and you might be walking away with this software. So Alex, before we jump in, what I want you to do, we talked about due diligence, right? What actually is due diligence for those people who are just brand new to investing in real estate?
Yeah, so due diligence is really simple. Due diligence on a real estate, any real estate asset, is understanding basic things about what you're buying. Am I buying the asset at the right value? Are there any things that are out there that will hurt my asset from the perspective of making money, right? So due diligence is a time period at which you have to research everything you can on this asset to come back to the seller, first of all, and say, well, I really don't like this asset. I can kick it back, or I really need to ask for a discount because there's a lot of exceptions or a lot of defects with something you tell me it's good. So looking at the reps and warrants that the seller is presenting in front of you and really understanding what's not there, what will you be liable for? And people say you make money on a purchase, not on a sale, right? So you really have to invest your time, your vendors, on understanding what's behind the purchase of the real estate.
Yeah, very well said there. It is. It's not really a sexy topic, right? It doesn't get a lot of people to jump on webinars or to open up emails, but the people who spend time really understanding this are the ones who pass the test of time, right? They're the ones who are still there. They're the ones, the best deal you've ever done, I think maybe you said this in the last show, are the ones you don't do sometimes, right? This show, full disclosure, is not about scaring you out of doing deals. It's about showing you how to operate effectively and just to understand where some of the pitfalls are and also how to repair those. Because sometimes if there's a big issue, someone might walk away from the deal, but you're like, you know what? That's fixable. And you can turn something that other people are scared into a big payday, as long as you get into any deal with your eyes wide open. So that's really what we're talking about here. So I'm excited for us, Alex, to kind of break all of this down. I know you have some slides, which we've never really done before in a presentation like this, but as diligent as you are, of course you would spend the time to prepare slides. So I'm excited about that. But Alex, if you could, because you work with so many buyers, and correct me if I'm wrong here, just to kind of give the audience some context, you do the due diligence, you cross the T's and dot the I's for some huge property buyers, people buying hundreds or thousands of properties. So you see every type of deal, you see the markets people are moving in. Does that kind of accurately describe your point of view in the market?
Yeah, absolutely. We get to deal with some of the largest buyers on the real estate market, folks that are buying the mortgages, folks that are buying real estate assets, just real properties, folks that are having tax sales, tax certificates, HOA sales. We are the shop, which is a not standard title company, right? We're not a title company. We don't issue title insurance or title policies. We run title research nationwide with Puerto Rico, Guam, and Virgin Islands included, and create analytics for our clients to understand what they're buying. So we're really underwriting the portfolios of loans. Either it's a single loan or single property, or it's 15,000, 20,000 properties at a time. We work with governments, some of the GSEs that have a huge number of assets that they're asking us to run through or to run due diligence, right? We learned the due diligence as a term. Some of the big hedge funds on the Wall Street that you read in the news about, they use our services. Some of the local townships, government offices, treasurers, when they do a tax sale, they ask us to run the title, to notify all the lien holders. So we work with really a lot of entities, and we know the market quite well because those folks use us. We know the sweet spots of the market, and we can really comment on what's hot today and what will be hot in 2020.
And you know what? I just want to reiterate something you said earlier. You started with nothing, right? For those of you who are on the line here that are like, man, I got it tough, right? This gentleman, Alex, moved here from another country, had nothing, and now kind of sits at the helm of, hundreds of millions of dollars in real estate transactions, probably quite frequently. So it's a great kind of rags to riches story here. That might not be how you define yourself, but there's a lot of people on the line here that are kind of starting fresh. They're starting with nothing. And the most important thing is for you to hear stories like Alex's, so you understand that this stuff really does happen. So Alex, why don't you go ahead and just give us a little overview of the market? Do you need the slide? Do you need to take the screen now for the slides, or is that for later?
Sure, I can take the screen. Let me share with everybody. I think this is interesting. Yeah. So this is really let me just get to this one. Yeah, so this is really a market segmentation in my mind for today's market, right? That's where I see not just millions, billions of dollars are moving in. So the idea is to understand what is the market today and what it's going to be in 2020. So let's start with the buying mortgages. So a lot of funds, foreign funds, domestic funds are pouring money in this bucket, which I call first lien investments. So those are real estate mortgages secured by the properties, right? Some mortgages are NPLs, which is non-performing lien mortgages, where the borrower defaulted on the mortgage and is already 60 days plus behind. So typically those are sold at a deep discount. When you look at some of the latest Fannie Mae and Freddie Mac sales, those loans are being sold at 66 to 78 cents on the dollar of the UPB, right, unpaid principal balance. RPL mortgages, very hot market right now. That's actually a majority of the capital markets, secondary markets trades. That's RPL mortgages, reperforming loans, which means at some point the borrower was in default, 60-day plus, 120-day plus in delinquency. They sign modification agreement with the hedge fund or with the Fannie Mae or Freddie Mac, and now they are making payments on time. So those loans are traded at the premium, and a lot of funds that I deal with, they buy NPLs and they sell RPLs, right? So you can see the spread when you buy the non-performing loans, you work out the modification agreements or reformation of the debt agreement with the borrower, and you sell as an RPL, you make a spread. Freddie Mac started to securitize loans in a special securitized pools. I think institutional investors can invest. So if you are doing some private lending or private wealth management with guys like Wells Fargo or Bank of America, I'm sure they'll have a way for you as an investor to invest in securitized pools, which is really a performing loan or newly originated loan that pays interest, and certainly you can buy the security rather than real estate asset and let somebody else manage your fortune. There's a tiny niche on the market, which is bankruptcy loans. A lot of folks prefer to buy bankruptcy loans. Why? Because A, you remove all the lien holders that are junior to your mortgage. They get wiped off from the property. You are having easier time to talk to the borrower in court. I mean, in fact, the judges or trustee, bankruptcy trustee, coordinates the execution of modification agreements. So now all of a sudden through bankruptcy, you can take the buyer that can't afford to pay anything, not the buyer, the borrower that can't afford to pay anything, to start making payments on a regular basis and making the loan performing. So that's another venue that a lot of funds use. They buy bankruptcy loans, and then they get, after the bankruptcy is discharged, they get the RPL loans, reperforming loans, right? There's a tiny segment of REO purchases and foreclosure sales, right? So a lot of the foreclosure sales and REO purchases are now done by mom and pop shops, fix and flip properties, right? So institutional buyers are staying away from that market because it's just not enough product, right? You hear that there's not enough foreclosure starts. It's the lowest amount of foreclosure properties in the market today. Why? Because there's so many other options exist for folks that are buying the mortgages, modification agreements, reformation, deed in lieu of foreclosure. So a lot of those exit strategies exist before the property gets hit or before the property is scheduled for the foreclosure sale. So that explains in a way why you see very little foreclosure sales or foreclosure properties going through the auctions. So it's really a dry market right now. Now, I do see that market picking up probably in the Q1, Q2, where I personally feel that there will be a recession. It has to be a recession just because of a lot of corporate debt. We see a lot of folks are, a lot of smaller companies are filing the bankruptcies and they're liquidating assets. Therefore, it will impact the local banks and having a chance for FDIC to come in, step in, and start taking over some of those failed banks because of the corporate credit, because of this bubble.
Yeah. I just want to jump in real quick. You've been given some really good information here, and you talked about a recession that's potentially coming. And one thing that you discussed in detail on the last call was a lot of the commercial loans and the commercial buildings are what's going to cause that. Because these local banks have given loans to these people who have companies that are competing with Amazon. They're getting their butts kicked. Toys R Us is going out of business, right? So now the person who is in trouble is the local bank. And, there's a great opportunity there as well. So you haven't really talked about a recession on normal houses. You're just saying a lot of commercial buildings and commercial notes are going to cause a problem in some of these secondary markets.
Yeah, I think it's going to be a chain effect, right? So let's say that GameStop is closing 200 stores. Therefore, there will not be a payments on the commercial debts, liabilities. The folks will be laid off. It's a bad example because it's not enough people to cause any effect.
Yeah.
But certainly, yeah, with the commercial debt on some of the large corporations like GE, you'll see a lot of layoffs, and therefore it'll trickle down to the residential market and in some way, probably, geographically related more than just global in the U.S.
All right. So just to sum that up, the commercial buildings, they're not going to be paying. The banks are going to be in trouble. The commercial buildings lay off employees, people who don't have jobs, they can't make their mortgage payment. There's kind of the ripple effect. So it seems like the important metric to kind of watch there is employment. As employment stays strong, things are good. But if you see a lot of these, these companies going out of business, I mean, honestly, Alex, I was driving to work and I noticed half my mall is being torn down, right? Who knows, and I'm watching, like I mentioned Toys R Us because Toys R Us is being torn down and new things are going in there. But this is a very transitional time in the market and it's really exciting.
Yeah, absolutely. It creates a lot of opportunities in my mind. And, one would say, Alex, well, how do you know that that's going to happen? I can tell you one thing, that most of my clients that are multi-billion-dollar clients, funds, they have something called opportunity funds. Opportunity fund is a fund which allows the investors to put some money aside for a market crash or market recession. And those funds are filling up so fast that it tells me that some of the bigger players in the market are getting ready for a recession and to buy cheap real estate assets, either companies, corporate debt, or anything that we'll see happen during the tough times.
Let me just ask a question, because what's really different about today's market versus the previous market that had a big recession is there is so much money right now that's been raised and deployed for real estate. There are these big hedge funds, there are these iBuyers, there's foreign investors coming in here buying up, property, way too fast, in my opinion. The U.S. is actually one of the only countries where foreigners can actually own real estate. So money is pouring in here. So you have all of that money that's pouring in. And then also when people lose their jobs in today's world, you have companies like Uber. This is the gig economy. Like back in the day, you couldn't just pick your phone out and drive for Uber for a while and make a few dollars to, help cover the mortgage or something like that. So I think this recession, whatever happens, won't look exactly like the last one because there's just new factors. With all of this money, Alex, there's so much money that's being plowed into real estate right now. I feel like it's going to keep the market up artificially for a little while.
Yeah, I agree. I think it's safer investment than say riding the stock market or doing all kinds of 401k investments or bonds or muni bonds. Real estate really allows you to control your fortune, right? So either you do it on your own or you do it through the third-party servicers without much control. But at least you know that if you buy something really cheap and you do your due diligence right, at the end you will make a profit, right? So
Great.
I'm personally, not in favor of buying and keeping. I've done it myself. I had, like I said, university housings. I owned a lot of houses and apartments, and they just, drugs shook me up. I sold everything. I had my first baby, and I had the gun to my head. Yeah.
Are you saying your tenants doing drugs shook you up, or you doing drugs shook you up?
Yeah. Well, no, I don't do drugs, but my tenants did.
Okay.
So,
I was just, I wanted to clear that up.
Thank you. I don't want people to have a different impression of me. But so I had the tenants that were doing drugs, and this, I was call it a slumlord coming to pick up rent, and there were a few, call it bouncers, were putting gun to my head and saying, who am I and what am I doing here? And I'm collecting rent at my own building, right? So with my first child being, 6 months old, I said, no, I'm selling everything. That was enough life experience that I will never forget. And that's why I went to the service business. Now, buying mortgages, why I started the story, buying mortgages really stays away from hammer and nail, right? So
Gotcha.
Buying notes really makes it a cleaner transaction where you can actually see profit and you work with the borrower, you help them, right? You say, can I help you? I want to help you. I want to reduce your principal payment. So you're approaching from the position of, helper, savior to really reinstate the borrower's credit. So it's slightly a different game than you buying a property, you're putting a tenant, and tenant basically trashes the whole place. So I've been there, I've done it, I don't want to do it again, even though, some people are successful in it.
But that's also how you pulled yourself from zero. You hustled your ass off. You went from zero to a nice stable security, nice stable income. And then once you had your head out from under the water, you're able to look around and say, all right, that was good. Now I want to do this. So real estate was a great stepping stone for you here. What's next on this list right here? This has been very educational.
Yeah. So we talked about REO purchases, foreclosure sales. We still see a significant number of bank-owned properties are being sold by servicers like Aqua and Deutsche Bank. And we work with a lot of buyers. We're on their diligence for the pools of properties. Tax sales really dried up. Again, mom and pop shops are playing in that market. You can't make much money anymore. Before it was a very hot business. I'd say about 5 to 6 years ago. I can tell you that U.S. Bank was buying all the tax certs in New Jersey because they were counting on this extra percent that kicks in the first year after the tax cert was purchased, and there's just no money there if the borrower or the lender pays off the tax certificates right away. So tax deeds is still a hot business, but it's not enough. Typically, that's the job of the lender to pay off the taxes if they want to maintain the position of the first lien.
So Alex,
HOA muni sales.
But before we move off the tax side of things, you mentioned two different types of tax sales there. One tax sale, you're actually essentially paying the homeowners back taxes, so the city can take that money and go build roads with it, and you get a percentage that is negotiated at the tax sale, whether it's 12% or 8% or 5%. It just depends on how the auction goes, right?
Right.
And the banks and people were eating those up, but you're saying there's a lot of there's too much competition there now, or it doesn't scale.
Too much competition, and people bid down the percent to zero.
Okay, so you're bidding down with that. So the city will say, "I'll give you 18%." Someone's like, "I'll take 12, I'll take 5, I'll take 4." So it goes all the way down to zero. So that model isn't working really well. And then there's also just tax sales that are like foreclosure sales, where you're going there and buying the properties. And we all know how difficult those are when you have everyone there, retail buyers, just trying to get a little bit of a deal. So that's there's some good times where you can actually I found it on the holidays, Alex, is the best time to buy from foreclosure sales and tax sales, because some investors, they go on vacation and you might actually get a good one. But it's challenging.
Yeah. So like I said before, it's a dry market now, where 4 or 5 years ago we saw 2,000 to 10,000 properties being acquired, or certificates being acquired at tax sales by some of the institutional buyers. Not so much anymore, right? So the most we would see 200 to 300 from a mid-sized hedge fund being acquired. So I would call it a market that really shrunk fast because it was flooded. Yes, on the paper it makes sense, but there's not much money made on that market.
Gotcha.
HOA muni sales, again, that's why I put the book out, Bulletproof Due Diligence.
Oh, there it is.
Because there you go, that's the book.
Yeah, take a look.
I can tell you that HOA market became very hot when Nevada passed a law that the HOA foreclosure will wipe off the first position mortgage. U.S. Bank lost, I think, $600,000 in HOA foreclosure for a few thousand. Okay, so it was done, I think, 2015 or 16, and that market was flooded. All the investors that knew about this law flooded Nevada market. Now there's 3 states that with HOA foreclosure can wipe off the mortgage, but selectively based on the declaration of condominium. Those states are Nevada, Texas, and Massachusetts, right? So where you really have to be a savvy buyer and run the due diligence, not the standard way, to figure out if HOA will be a first position lien and can wipe off the foreclosure. Not even a lot of servicers know it. They lost a lot of money there. In fact, I spoke with one of the servicers. They were so shocked to lose the property to HOA foreclosure in Texas and in Massachusetts. And basically, they couldn't recover the mortgages, right? They lost, $500,000 each on the HOA foreclosure. And municipal sales, the same thing. If there's a municipal sale and you're not careful monitoring it as the lender, you can really lose your mortgage. Why? Because there's some provisions, local provisions from local jurisdiction to guarantee that municipal sale will give you a deed free and clear of all the mortgages, all the liens.
Can you define that for anyone who doesn't know what a muni sale is?
Sure. Well, starting with water and sewer in New Jersey. Water and sewer in New Jersey, if the borrower doesn't pay municipality for water and sewer, then the municipality issues a certificate of municipal sale to the investor. After a certain time, the investor has a right to foreclose on that certificate, and if there's no buyers, then the investor and certificate becomes an owner of the property, free and clear. Another example in, let's say, I think on the last call we did, City of Buffalo in New York foreclosed on the property free and clear of any mortgages because of permit violations, right? So that's another municipal sale. I think the occupancy permit was not paid, or there was something going on with the property where it was not up to par, non-compliant, and it was sold free and clear of any mortgages. Some of the municipal sales we saw the code compliance, right? So in other words, the city of Chicago might sell the property for all kinds of violations, and they post on the recorder sites a document stating that, hey, this is in order to fix the property, bring it to code compliance, otherwise they'll be forced to sell the property on the auction. So there's plenty of notices out there. A savvy investor would know how to monitor for those, but those are examples of muni sales.
Wow. Okay. Thank you for breaking that down for us.
Yeah. A few final segments. So second position mortgages, those are HELOCs. Those are mortgages that are typically second in position or lower. And of course, this is a very hot market now. It'll become even more trades for the second position mortgages will happen in 2020. And I can tell you that a lot of banks are sitting on those assets, not knowing what to do with them. Why? Because during this recovery cycle from financial crisis to now, the first position mortgages was a hot market, and there were a lot of foreclosures wiping out the second position mortgages. Now, the banks that were sitting on the second position mortgages, they really didn't monitor, right, what happened to their mortgage. So they don't know if the mortgage was wiped off in the first lien foreclosure, if it was unsecured by tax sale, bankruptcy sale. So they have huge amounts of portfolio. And we're talking about, Fannie Mae, Freddie Mac, CD, Bank of America, TD Bank, PNC. So a lot of the usual suspects that were sitting on this large portfolios of seconds, and there were not a lot of monitoring done. What happened with that portfolio? Now there are tools available that they can use to due diligence tools that they can use to evaluate what are those assets, what are those mortgages, how can I make buckets of those mortgages where I can say, well, this is a mortgage that is a performing second position mortgage, the borrower is paying it, and he's on schedule. He's making all the payments. RPLs is reperforming loans, right? So let's say that the hedge fund bought a second position mortgage and they negotiated with the borrower on the lower payments or shorter terms. NPLs, non-performing liens, so those are really, a paper that can be wiped off by a first lien foreclosure. So it's a very risky asset. And then unsecured. What's unsecured is like the regular civil judgments, right? So those are a couple of cents on a dollar. That's what the trade value is for those unsecured assets, where you know that the second lien mortgage does not attach to the property, right? It's unsecured. It's not secured by real estate. So it means it's as close as the civil judgment. You can try to collect through civil courts, but the borrower can just plainly ignore it and not pay it. And final two assets, this is reverse mortgage asset class, I think is very, very hot. It's vacant property sales, right? So that's what I'm talking about. Reverse mortgages are given to the people which are 65 years old. They get qualified to get a reverse mortgage, and the idea behind reverse mortgage, for folks that don't know it, once the last borrower is deceased, the property goes to the bank, right? Heirs of the borrower has a right to redeem the property from the bank if they want to, but those sales that I'm talking about are past that redemption, right? So nobody lives there, and the bank is about to, the bank means HUD, Housing and Urban Development, about to own it, but still a process of foreclosure needs to take place to make an ownership part official. So I spoke with HUD folks, and they are running those vacant property sales or reverse mortgage sales. A lot of hedge funds are starting to be interested in that market. And to play in that market, you don't need to have billions of dollars. I think you can really go and attack that sale or that market with anywhere from $10 to $50 million investment, either if you're teaming up with investors or if you are a small to mid-sized hedge fund you can go after that market. And finally, commercial assets.
Let me just, before we jump
Yeah.
into commercial assets, there's a lot of people here on the line that don't have $10 million, and they're looking at this whole vacant property in this HUD sales. And inside our software, which I'm about to give away in a little while, we have lists of all of the vacant properties. We have lists of all of the probate properties, and you can kind of figure those out. Are you telling me if someone has a reverse mortgage, right, once they've passed away, the people who would typically have inherited that house are basically said, hey, you can go ahead and inherit this house if you give us $85,000, because that's the amount of money that came out of the property, right? So they give the heirs the chance to bring it whole?
Yeah, so heirs, exactly. So heirs have a right of redemption. So when the last borrower is deceased in the property, heirs have a right to go and pay the lender the full amount of the mortgage.
How long do they have to do that?
I think 90 to 120 days. That's what I'm not sure, but I think that's the time frame.
I'm just trying to think through the process. Your parents pass away. You're going through the grieving process. There goes 30 days, 45 days. Then you kind of wake up and you're like, all right, I got to sell the house. And you have a handful of days to do it. And you're like, you know what? I'm just going to let the bank take it. Unless you can sell it really quickly.
Well, it's not even a sale of the house, Ross. It's actually buying the house. So in other words, the heir has a right to redeem, which means the right to buy a house from the bank.
For what's owed.
So the agreement says that, right. So the agreement says that I'm the borrower. When I'm deceased, the bank has the property unless my heir will pay the full amount of the mortgage to the bank, and now heir owns the property. So the heir woke up and says, well, I have, do I like that property? Do I want to live there now? And I'll go pay whatever the mortgage amount is to the bank, and now I own the property. Does it happen? Very rarely.
Yeah, I'm a software and data guy, so my head is really spinning here. I'm thinking, how do I get a list of all the reverse mortgages, right? And then know when that second person passes away. So inside our software, I can say, hey, here are some people that need to sell a house very quickly. I don't know if that information is available, but you definitely got my head spinning, because that's a fantastic opportunity for someone to cherry pick kind of one-offs rather than needing $10 million to go to the bank directly, because that's what the big hedge funds are doing. They're buying all the notes and then they're reselling them. So I'm trying to figure out how to get our people, ahead of the process.
Sure. I mean, software guy to a software guy. I can tell you that you can really scrape the reverse mortgage list from county websites and figure out who the borrowers are, and also scrape the list of deaths in the county and figure out if the borrower is deceased. Marry those two databases, and you'll probably have a contact list of who you would go after and say, well, is the property worth investing in through the heir, right? That's what you're thinking about.
Yeah, exactly. You can maybe send that person some mail, go to the door, knock on it, leave a note, do a skip trace, something like that, because that could be a huge opportunity there. So thanks for basically walking us through what I'm going to have my developers do starting next week. No, but in all seriousness, no, that's why you attend these podcasts, everyone, because you get to hear these ideas and things start kind of sparking, and you can kind of get ahead of the market here. So you're really smart for being here on this call. So let's go ahead and talk about the commercial assets.
Yeah, so commercial assets, very steady business. I can tell you that the commercial assets is really including a lot of classes inside. Hotels, motels, the hospitals, apartment buildings. So all kinds of commercial assets that are being traded at the huge discounts. One of our clients, they buy, motels, and they upgrade it from, 2-star to 5 stars. And that's how they create a value. That's their bread and butter. They do it all over East Coast.
I was talking to someone who finds extended stay properties. They're like long-term, and then they convert them into nursing homes, because those extended stays are just going out of business, right? Like people are staying at Airbnbs now. So it's, repurposing those commercial assets is a great opportunity.
Yeah, I mean, it's really mobile home parks, right? I had one guy who is purely investing in mobile home parks, and those assets are available for sale. So my recommendation is for commercial investors to go and register on DebtX, which is a great place. Monitor Mission Global Mission Capital, monitor auction.com. So those are the places. Ross, do you carry on your sites? Do you carry the commercial properties?
Yeah, absolutely. And we actually have all the auction.com properties inside our site. So it's, it's a great spot for that. And as a matter of fact, the person I'm interviewing right after we get off this line is a mobile home park investor. So
interesting.
It's funny how it all kind of ties together. Anything else you want to touch on the commercial assets here?
No, I think it's a great class, very steady. I didn't see ups and downs in the past 10 years. It's really, I call it a flat to up, slightly up market. So if you don't, like all those bounces of the market, ups and downs, I think commercial assets is really a steady class that will keep you investing on a regular basis.
Great. Okay. Well, let's go ahead and this has been awesome. Before we jump into the next segment of this, I want to announce the winner of the software. We've been kind of talking about it for a little bit, and if you visit connectedinvestors.com, you can sign up and jump on a webinar where we show you this software. But the winner of today's software, this gentleman, went to exactlyhow.com to claim the free gifts, because you can go to exactlyhow.com and get the show notes. Because, gosh, Alex has talked about a lot. You're going to want to reread some of the best parts of this episode. They went there, they commented on our videos, and the winner of today's software is, before we move on, here's a word from our sponsor.
Looking for a private money partner to fund your flips or rentals? Go direct to the source. PrivateLenders.com, a free marketplace that instantly matches you with up to 5 private money lenders to save thousands by having non-bank lenders compete to be your funding partner. PrivateLenders.com.
Paul Pacarosa. Paul, congratulations. You won the software. Okay. Our team will be reaching out to you and getting you all set up with that. So great job, Paul. All right. So Alex, I hate to kind of do this to our members, but on this next section, when we go through due diligence, let's hit high level on some of this, because I know I only had a certain amount of time with you here, but I didn't want to slow you down at all on the 2020 market segmentation and dynamics. This is some of the most important information for real estate investors to understand, for investors to understand. So I didn't want to kind of slow you down there. But as we go through these next few slides, we got about 10-15 minutes to kind of run through them.
Absolutely. So let me go fast. Now, the reason why I wrote a book, right, is to make sure that I explain in details for some of the beginner investors on what to do in diligence, how to design your due diligence process on anything you buy in any of those segments we talked about. So let's go through 5 basic steps that you need in real estate due diligence. 1, title search. Title search is needed, and that's what my company does, is needed to pull up any liens, any mortgages, any taxes, any bankruptcy issues, or whether or not the borrower is in bankruptcy, the property is stuck in bankruptcy. So why do we do it? This is a cost underwriting, right? So we want to find out what are the liens that would stick to the property after the foreclosure. So you buy the mortgage, you buy the property, what do I have to pay off? Water, sewer, HOA liens, municipal liens. If I'm buying the mortgage, am I in the first position, second position? Am I buying the right? Am I buying what the seller represents? I'm buying. So that's 1. Number 2, title exam. So what is the title exam? Title exam is really going page by page for every copy that we provide for you. Copies of the liens, copies of the mortgages, copies of the assignments, chain of title. So why do you need that? Well, if you don't have the right things as a part of, let's say you're buying a mortgage, if you don't have a legal description as a part of the mortgage is not enforceable. If one of the borrowers didn't sign the mortgage is not enforceable. In other words, you cannot foreclose on the property. If the chain of assignment of mortgage from one institution to another is broken, mortgage is not enforceable. Why? Because the chain of assignment has to flow perfectly from one party to another. You can flag fraudulent transactions. Let's say that the property is owned by 5 people and only 2 people signed the mortgage. Guess what? 3 people will stay in the property. You will not be able to kick them out after the foreclosure. So now you get to own part of the property and do nothing with it. So a lot of diligence is really involved in trying to establish enforceability of the mortgage, enforceability
This is, you have me thinking here. Can I have you look over my mortgages to see if I don't have to pay them?
Well, yes. I was actually involved in some of the foreclosure defense and presented in front of Department of Justice in Florida, New York, and Arizona. And those agents were interested in things like robo-signing. Remember that scandal, robo-signing?
No, I totally do.
Right. So we were at the front of that scandal doing a research for Department of Justice where we would uncover fraud and various other things. There's a business to look at the enforceability of the mortgage and help homeowners. There's a business called foreclosure defense. A lot of attorneys, local attorneys typically get involved with it. It's a tiny market, but certainly it's investor opportunity. A lot of investors flooded that market real quick, trying to help homeowner, trying to look for the defects, buy the mortgage, get the property, and then fight the first lien holder. So it's still going on. There's still tiny opportunities there, but just a lot of case law happened, and it's tougher to win those battles.
What I love about talking to you, Alex, in this call and the previous one, you seem to know every loophole. On our last call,
I'm a dangerous man. Yeah.
Yeah, you talked about some loophole in New York. Where people could basically just keep the property forever and there's nothing anyone could do about it. You've mentioned a few loopholes here. So it's for someone who's analyzing tens of thousands of notes and has seen it all and is the one who has called, in front of, different counties or states to help figure this stuff out. It's really cool to listen to you talk. And guys, title search, liens, mortgages, I've messed up on all of that stuff in the past. It's fixable. But it's nice to kind of take this through. And a lot of our people on the line here are residential real estate investors. If they just are buying a property and just getting a normal title search done and they have title insurance, some of this stuff isn't necessarily as scary as it is for someone who is going and buying notes at scale, correct?
Yeah. Notes at scale, or even foreclosure properties, or tax sale properties. Mm-hmm. Yeah, so if you're buying the foreclosure sale a property, you need to know which liens stick to the property. So that I'll skip to number 5 on my list, right? So there are some things that you should be aware that when you buy the property at the foreclosure sale, either HOA or mortgage foreclosure sale, they stick to the property, you have to pay it off. And those are, we call it unrecorded liens. I had a case where one guy foreclosed on the property, did the title search through us, and then he was slapped with $20,000 lien by municipality. And he goes, Alex, why didn't you pick it up? Well, it's unrecorded lien. So there are liens at the township level, which are not recorded at the county, which is covered by title search. Water and sewer balance, right? In city of Philadelphia, water, sewer, and gas balances from the prior owner attached to the property and has to be paid off by a new owner. So if you're investing in Philly, you need to know that. 50% of the United States have similar legal structure where the balance, not the lien, the balance which is kept at the township or at the local municipality serving the water, serving the sewer, garbage pickups, those unrecorded balances can stick to the property. Code enforcement liens, if you have permit violations, code enforcement liens, environmental hazards, leaky oil tank in the ground, all of those things will cost you a lot of money. And the only way to discover those is calling the township, finding out if there's any violations, any code enforcement liens. We do those research at scale as well for some of our large funds. Demolition alerts. Townships can demolish the property for not complying with the code. Let's say you build a deck without a permit. Well, there's an order to demolish a deck, right? So as an investor, you have to deal with it. You have to demolish it and put it back up once you get the right permits. Vacant property registrations. So those things will hurt you if you're investing in vacant properties, right? They have to be registered with the county. Ohio just published a new law stating that every vacant property has to be registered with the county. Otherwise, there's a per-day violation. In city of Los Angeles, that violation can go up to $100,000 paid by the new owner. So every township tries to get as much money generated from the new investors as possible. You have to be careful. You have to do your due diligence to make sure that you don't run into those pitfalls and you don't get punished. I'm not here to scare you. Tons of great product out there. But if you stumbled on one that will cause you a huge loss and headache, that's what I'm trying to make sure you avoid.
Yeah. Yeah, when you invest the time up front, you pass the test of time. So this is really good stuff right here. Well, great. Let's go and throw me the screen back. I'm really excited. I'm going to have our writers spend extra time on this particular presentation to make sure we were able to properly pull everything out of our guest's head, so you can go back through this, because you're definitely going to want to go back through this. So, Alex, let me ask you the most important question here. What do you think your life would be like if you never invested in real estate?
That would be pretty boring. Well, I would probably have a full-time job, 9 to 5. I would sleep well. I would have my vacation times. I would worry about my job security. As opposed to what I'm doing today, I am not sleeping well. I'm only sleeping, 6 to 7 hours. I'm excited to come to work every day, and everything depends on me. I'm at the driver's seat. I drive the company. I have to invent. I constantly have to perform, right? We talk about high-performance individuals. Well, I think I'm one of them, because if I just do nothing, then the company will fail. So it's constantly, the company depends on me to perform, make sure that all the employees that I have are busy. And certainly there's some pros and cons, but
Yeah.
I love what I do now.
Hey, would you mind holding that book up? Just hold.
Yeah, absolutely.
Go ahead and hold the book up right in front of the camera. There you go. So this is really important, guys, because number one, it's going to be at exactlyhow.com. You'll be able to go there, get access to this book. This will take you through everything A to Z. You've seen how thorough Alex is. So you can go ahead and pick it up at exactlyhow.com and review the notes and all of that. So I'm really excited for you guys to kind of let this information digest a little bit, because he has, out of everyone we've had on the webinar, on this podcast and our YouTube show, he has a very unique perspective in what he does. So I was so excited to get him back again after. Now you guys understand why I was so upset on the first podcast, not recording properly. All right, Alex, you got time for a little rapid fire?
Sure, go for it.
All right. On a scale of 1 to 10, how strict were your parents?
I'd say about 5. Not that strict. I could do whatever I want.
Get up early or stay up late?
Both.
How many hours of sleep do you get?
Well, as I said, about 6 to 7 hours tops.
Favorite or most recent book that you've read?
It was Mark Hansen, his biography and his lifestyle.
Great. If you could be any superhero, who would it be?
Superman. That's what my kids want me to be.
What is something everyone should do less of?
Less of complaining. Everybody loves complaining, being negative, why things don't work. Make it work. Figure it out.
Yeah, and a lot of times you're complaining in your head and you don't even realize it. So careful. Careful about that. It does affect you. What is something everyone should do more of?
Well, first of all, smile, and second of all, surround yourself with people that you like. Make sure they encourage you, and you'll feel much better yourself.
Bitcoin, bang or bust?
Bust in U.S. I don't believe in it. In U.S., I do believe in it. In outside of U.S., great concept. We'll see how it works out.
And will people visit Mars in your lifetime?
Yes, I believe in Elon Musk. So that's something that my son wants to go to. Dad, I want to go to Mars. I said, nah, I'm sure you will.
That's awesome. Yeah, I follow the stuff he's doing. Actually, last night I accidentally put on Ancient Aliens on Netflix. Crazy show. Crazy show. All right.
I can tell you that we had the chance to work with Elon Musk on the Boring Group, helping to build a tunnel in Chicago, O'Hare Airport to Center City, Chicago, underground tunnel. So I'm so excited for this guy. He does whatever he thinks he develops or he does useful things, he says. So going to Mars and building the tunnels is something that, I was so impressed with.
Well, great. Make sure to get him on this podcast.
Oh, yeah.
I'm sure it's the first thing you'll mention if you ever have the opportunity to see him. Well, Alex,
Sure.
thanks so much for jumping on. You provided a lot of great value.
Sure, absolutely. My pleasure. That was fun.
All right. And for everyone who made it to the end of the show, congratulations. Most people don't finish what they start, which means you are special, which means you enjoyed the context of this call. Alex and I both worked really hard to bring you this, and all we ask is that you share it with your friends. Give us a thumbs up, tag someone that needs to see this. At least leave a comment on something that you've learned. The interaction that you guys give on our YouTube channel and on our Facebook post and Instagram really fuel us. And a lot of people have said, hey, I'd love to see a show on this. And then we go out and find the Alex, right, of that topic, and we bring them on. So, your wish is, kind of our command here. So let us know exactly what you want. Put it in the comments. Make sure to share this, and make sure to visit exactlyhow.com for all the show notes, to be able to get access to Alex's book and more. So thanks again for being here. I'll talk to you on the next Exactly How.
The Connected Investors app connects you with investors, notifies you of available properties, helps locate cash buyers, and secure private funding to close deals. Set up in seconds to become a member of the Connected Investors social network. Now you can scroll through your main feed to find cash buyers, see investment properties not available to the general public, and network with investors by adding your own comments to a thread to keep the conversation going. The Control Center is your connection to add properties to sell, start new discussions, connect with local investors, and even find private funding. The Notifications tab will keep you alerted to new investment properties and offers. You'll also find new friend requests to connect directly with the community to build your network. From the property marketplace, you'll be able to find, favorite, and make offers on investment properties. Download Connected Investors today to find, figure, fund, and flip investment properties on the go.